guys, welcome to Talking Money with Nosy, Personal Finance Made Simple. Today, I'm going to be showing you my October 2022 investments. Basically, I'm buying the dip. The reason why I'm saying I'm buying the dip is because there is blood on the streets right now. The markets are going down. There's fear and panic globally because of high interest rates, high cost of living, recession fears, energy crisis. Let's just say that the world is not very happy right now. But I am, and I'm going to explain why shortly. Before I show you my investments for the month, I want to answer a question that a lot of new investors commonly ask me, and that is, when is the best time to invest? As investors, we all want to buy shares or ETFs when they are at a low price, and we hope to sell them when they are at a much higher price later, because that's how we make money, right? That's why people ask when they should invest, because they don't want to buy shares when they are high or expensive. They want to buy them when they are low or cheap, right? Makes sense. But ask yourself this question: is it possible or even practical to always buy shares when they are low? Wanting to buy only when prices are low leaves a lot of unanswered questions. For example, when shares are high, how long will they keep rising? And when exactly are they going to dip or go low? Are they going to keep rising for the next month, 12 months, 5 years, 10 years or more? If shares keep rising for the next 5 years, for example, are you going to keep waiting to invest for all that time? What are you going to do with inflation that keeps eating away at the value of your cash every year? Something to think about, right? Unfortunately, wanting to buy low and sell high all the time causes many investors to wait for shares to dip in price, and many times they miss out on opportunities. There are two ways in which people miss out. Number one, when the market is doing well and the prices of shares or ETFs are going up, some people will try to wait until the shares come down because they don't want to buy shares when they are expensive. What usually ends up happening is that the market continues to rise for a very, very long time, and those that are waiting miss out on those gains. Problem number two, when the market is crashing or correcting, some people also try to wait for the bottom or the lowest point of the market crash so that they can invest at the lowest possible prices. What usually ends up happening is that most people miss the bottom and the markets rise without them and leaves them behind. The most recent example of this was in 2020. The markets crashed in March 2020, and at that point, some investors said they were going to wait for the bottom, which they thought was a long time into the future. But what ended up happening is that the market started rising in April 2020, barely a month later, and those who were waiting for the bottom missed out on those gains. So that's how some investors try to play dice with the markets, and they become entangled in speculation and confusion of market timing. Should I wait? Should I buy? And all of this is simply not advisable for a long-term investment strategy, because more people get the timing wrong as opposed to those that actually get it right. If you get your timing wrong, you're unfortunately not going to be a very successful investor. So what is the solution then? When should you invest? Well, personally, I use a method of investing called dollar cost averaging, or rand cost averaging if you're in South Africa. Dollar cost averaging is a method of investing the same amount of money regularly without trying to time the market. You invest regardless of whether the market is up or down. So how does dollar cost averaging work? To get a better understanding of how dollar cost averaging works, I'm going to show you an example. Keep in mind that this is an example, guys. This is the table and the graph that I'm going to use to explain to you how dollar cost averaging or rand cost averaging works. Let's say that you invest 2,000 Rand per month into an ETF for 6 months. So here are the months, here are the investment amounts, which is 2,000 Rand. These are the prices of the ETFs, and these are the number of ETFs that the 2,000 Rand buys on those different months. After making monthly contributions of equal amounts to your investments, at the end of 6 months, you're going to have 12,000 Rand. Note that if you had bought your ETFs with a 12,000 Rand lump sum in month 1, you are going to pay 40 Rand per ETF, right? and that would have got you 300 ETFs only. But by rand cost averaging over 6 months, so in month 1 you buy 50 ETFs with 2,000 rand. In month 2 the price of the ETF has gone down to 30 rand, so this time around 2,000 rand gets 67 ETFs. In month 3 the price of the ETF has gone down to 15 rand. 2,000 rand is going to get you 133 ETFs. In month 4 the price changes to 55 rand, so this time around 2,000 rand gets you 36 ETFs. And then in month 5 the price is 35 rand, 2,000 rand gets you 57 ETFs. And finally, in month 6, the price of one ETF is 65 rand, and 2,000 rand will get you 31 ETFs. So at the end of the 6 months, with dollar cost averaging, you get 374 ETFs as compared to the 300 ETFs if you had bought with the lump sum in month 1. What I want you to notice is that the average price of the ETFs, simply add the different prices of the ETFs over the 6 months, divide by 6, and you get 40 rand. So that's the average price. But the average price that you actually paid per ETF is lower, because what you do, you say 12,000 rand divided by the number of ETFs that you have, which is 374, it'll actually give you an average price of 32 rand. So your average cost is much lower with dollar cost averaging. You're getting more for less money. The next thing that I want to show you is this graph which I drew. This graph is just showing you the price movement of the ETF. So it's just the information from this table. At the bottom here, it's months 1 to 6. And the zigzag is showing the share price movements. We've got 40 rand, then it drops to 30, then to 15, then back to 55, etc. What I want you to notice is that the average ETF price is going up. Even though the graph zigzags up and down, as the prices go up and down, the red line, which is the average ETF price, is going up, which means your money is growing despite the ups and downs. The biggest advantage of dollar cost averaging or rand cost averaging is that it takes emotions out of investing. Our emotions are very powerful and can cause us to make wrong financial decisions, especially when we are bored, excited, or scared, which is most of the time, right? Most of the time we're in between bored, excited, or scared. I always laugh when I hear people saying or telling others that don't be emotional. And I'm like, the truth is that all of us are emotional because that's what makes us human. Denying or pretending that you don't have emotions doesn't help you. It actually makes you more vulnerable to making silly mistakes because it means that you're not self-aware. Anyway, if you make regular investments, no matter what the market conditions are, your emotions are eliminated out of the decision-making process, and that's a very good thing. Sadly, many people allow their emotions to control their decisions, and when markets go down, they panic and sell their investments. But when you dollar cost average, markets going down can be seen as an opportunity to buy shares at low prices. So even though I don't wait for the perfect time to invest, because I invest every year from January to December, I get especially excited when markets are going down as they are now, because I am buying the same investments that I buy all through the year, but at much lower prices. Basically, I'm getting more shares with the same amount of money. If the markets go down again next month, which is what other people ask me, oh, so you're gonna buy the dip, what if it dips again? Well, if it dips again, I'm investing again. If the market goes up, I'm going to invest anyway. Guys, when it comes to investing, remember that time is your best friend. The earlier you start investing and the longer you keep investing and stay invested, the better. Personally, I'm going to invest for the rest of my life, and that's a very long time because I'm planning to live until I am very old. Anyway, if you watched my previous videos where I spoke about how the stock market works, I said that over time, the market always goes up, and 15, 20, 30 years from now, the market will definitely be much higher than what it is today. So the market's dropping now will just be like a tiny drop in the ocean in the year 2042 and beyond, etc. So there's no need to panic, but the market is going down, the world is gonna end. Guys, markets have dropped before, even worse than what they've dropped right now, and they've always recovered. So take it as an opportunity, get excited, become happy, just like I am. With that said, let me show you my investments for this month. Alright guys, these are my investments for this month. As you can see, I've already logged into Easy Equities. I'm going to be investing in my Easy Equities USD or US dollar account. As usual, I'm going to start with my ETFs in the US account. I've got 2 ETFs. ETF stands for Exchange Traded Fund. So let's have a look at my portfolio, guys, and you'll see how scary things are looking. But of course, like I said, I'm a long-term investor and market downturns don't really faze me. So my account is currently sitting at negative 12.53%. There is blood on the market, but I'm very, very excited because I'm picking up good companies at a very, very cheap price. So my first ETF of choice is this one, the Schwab Dividend ETF. So I'm going to click on buy more. I've already explained what this ETF is in my previous videos. I am so happy. Last month I bought this ETF at more than $70 a pop. This time it has fallen. It is now $66. So I'm going to invest $262 worth. I always invest more into my ETFs rather than individual shares. So I'm going to select the second option, which is only buy at ask. This just means that the buy order must go through if the price matches the current buying price. If it matches it or it's lower than that. So I'm going to place buy order. My second investment will be VTI. VTI is the Vanguard US Total Stock Market Index ETF. Basically, this one has got more than 4,000 American shares in there. And people always say, why didn't you buy this share? Or why didn't you buy that one? And I say, look, I've got the ETF. If I've missed a good company, if I've picked badly, somehow, somewhere, it's going to be in the VTI ETF, right? And so again, with this one, I'm going to buy for the same amount as SCHD. I'm going to buy $262 worth and place buy order. And by the way, this ETF Vanguard is paying dividends on the 29th of September, I think. So in a couple of days, I'll be receiving my dividends. Account overview, let's go to the next one. My next purchase is going to be BlackRock. This is the largest investment manager or asset manager that is listed on the stock market in the world. Guys, it's the largest. And so I'm going to buy more. So with all my shares, I'm going to buy $20 worth of each. So as you can see, I allocate more money into ETFs because ETFs are safer. If I pick bad stocks, or if I'm a bad stock picker, at least the ETFs will cover me. That's my reason. Place by order. The next share that I'm buying is Caterpillar. So if I go to my holdings, here is Caterpillar. Caterpillar manufactures construction and mining equipment. You guys know this company. I'm going to pick it up for $20 as well. Place by order. Account overview. Next, I am buying a favorite of mine. I don't know why, but I just love the Goog. I'm buying Google. Google has fallen 19%. I'm so excited because I never thought I'd see the day when Google was selling below $100. It's currently trading at $97 and something, and I'm very, very excited about it. The one thing about Google is that it doesn't even pay dividends, you know, and I love dividends. So that's how much I like this company. I'm willing to buy it even though it doesn't pay dividends. Place buy order. My next investment is going to be Home Depot, or HD for short. Home Depot is a home improvement store. I mentioned it last time, much like Builders here in South Africa. And I'm also going to pick it up for $20. Place buy order. My next investment is JPM, which is JP Morgan and Chase. This is the largest bank in America. And I'm also going to pick it up for $20 a share. Second option, place buy order. My next investment is Coca-Cola. I'm going to buy $20 worth of this amazing company, which is more than 100 years old. And I think it's going to be here 100 years into the future. The next company that I'm buying is Pfizer. Pfizer, a pharmaceutical research company. I'm going to pick it up for $20. Place by order. My next investment is going to be T. Rowe Price. T. Rowe Price, I spoke about it last time again. It's an asset manager. It manages people's investments, people's mutual funds, and I'm going to pay $20 for it. Second option, place by order. Next is another favorite of mine. Actually, I think it's my second largest in terms of the shares. Yeah, so Google is number one. Number two is Microsoft in terms of how much money I've invested in there. And recently they increased their dividend by 10%. So absolutely loving Microsoft. Buy more, and I'm going to pay $20 as well. Next, I'm going to buy Visa. Visa is a payments processor, so a lot of people always think that Visa is a credit card company. They are not a credit card company. They are like a go-between for payments between merchants and customers. So I love this business. It's growing, and its competitors MasterCard. MasterCard is also good. I just picked up Visa because I had to choose one. Place by order. Next, I'm going to buy Target. Target is a retail store, as I mentioned before, and I'm also going to pick it up for $20. Second option, place by order. And I'm currently left with $26.68. Let's see my pending orders. Okay, so I've got a couple of shares pending. I've got 4 of them. The rest have executed. I'm going to leave this $26.68. The reason is because I'm expecting dividends on the 29th of September, on the 30th, as well as on the 3rd of October. So I want those dividends to come in, and then I'm going to buy my last share. And my last share that I'm going to buy is going to be one that I haven't picked up in a while. It's going to be Procter & Gamble. So a lot of you are familiar with Procter & Gamble. They make a lot of the stuff that we use. They make soaps, they make cleaning detergents, they make a lot of things that we use on a day-to-day basis. So I'm just going to wait for the dividends to come in, and then I'm going to buy my Procter & Gamble shares. Okay guys, that's it for today's video. So tell me, what shares or ETFs are you buying this month? Please write your answers in the comment section below. Also, if you are a complete beginner to investing and you need step-by-step guidance on how to start, please grab copies of my ebooks about investing from my online store. The link is in my description below. Thank you for watching this video, guys. I hope you enjoyed it. If you did, please give it a thumbs up and also subscribe to my channel. Until next time, bye guys.